where everyone is focused on the same North Star, it makes such a difference in the culture, in the purpose that people feel, and the way that people treat each other. I mean, this gets a little sappy, but I really do believe that Bitcoin has that impact. And where does this happen long term? I mean, I think Bitcoin will, I don't know when, but I'm very confident that it will one day be the global reserve asset that everyone utilizes in the same way that we're utilizing dollars now and saying dollars are the safest investment that you can possibly hold. Corporations, sovereign wealth funds, pension funds. Eventually, that answer is going to be Bitcoin is the safest investment you can possibly hold when you're thinking about preserving your value and your wealth for the long term.
Alrighty, hello everyone, Spencer Nichols from Bitcoin Magazine here, and today we are welcoming Connor Dolan to the podcast. And Connor is the VP of Enterprise Sales at Unchained, and I'm really excited to hear his thoughts on the state of enterprise and corporate Bitcoin adoption. And I think Connor has a unique background in that he currently works in the Bitcoin space, but previously was working under BlackRock in the treasury management space. And so I think that he's going to be able to shed a little bit of light on where we are at in this adoption cycle and what it's going to take to be able to drive things forward and really what that process of corporate and enterprise adoption looks like. So we're going to get into the details a little bit more, but before we do that, Connor, how are you today?
I'm doing well, Spencer. It's good to chat with you again. Thank you for having me.
Of course, yeah. No, looking forward to this conversation. And I guess before we kind of get into the nitty gritty of how you see adoption of Bitcoin by enterprise in general, but I would love to just get a little bit more of a sense of what it is you're doing with Unchained as VP of Enterprise Sales. Could you just tell us a little bit more about that?
Yeah, absolutely. So as you mentioned, I'm a VP of Enterprise Sales at Unchained. I joined back in June of 2021 and was in traditional finance before that. I think we'll probably get into that a little bit. For those that may be unfamiliar with Unchained at a very high level, what we do is we provide Bitcoin financial services to both individuals and businesses who are looking to secure Bitcoin for the long term. What that looks like, and I'm happy to get as into the weeds as we'd like here, but at a high level, from a custody model standpoint, we are utilizing multi-signature custody, which is the ability to build addresses on Bitcoin's blockchain that have multiple private keys associated with them. And we construct these addresses so that as a client, whether you're an individual or a business, you still have a quorum of the keys. You are the only individual or entity that has access to the Bitcoin, but importantly, you're not on an island. You have a team at Unchained that will teach you how to hold your own private keys using hardware wallets, teach you how multi-sig works. But really importantly, we're sharing the responsibility of holding the keys alongside you. So we hold one key ourselves. That means that we don't have the ability to access or rehypothecate the Bitcoin like any sort of custodial service would, but we do have the ability to help you recover the Bitcoin if you were to ever lose one of your keys. So that's really the foundation of what we do. And then we layer financial services on top of that. So we have accounts for individuals, for businesses, for trusts. We even have an IRA solution that allows you to have real Bitcoin in an IRA while controlling the keys. We have a trading desk. We have Bitcoin-backed loans. Really, the goal is to provide you with all of the financial services that you would expect to get from a private wealth institution, with a core difference being you actually get to custody the asset yourself, and you don't have to trust any third party, including Unchained, to protect your own wealth. So what I do at Unchained as a VP of Enterprise Sales is I help at a high level explain the platform to individuals and answer questions to clients who have questions before they want to move forward with their platform.
Got it. Yeah, thanks for sharing. And I think it's it makes a lot of sense that you now work for Unchained, and you're essentially helping individuals and enterprise manage their Bitcoin treasuries, and in a similar sense, you were helping corporations manage their treasuries when you were working with BlackRock. And I think I just would love to get a little bit more of a sense of what that was like, because I think what you have is unique perspective on how corporate treasurers think. And that can maybe kind of give us some insight into where we are at in terms of getting these people to understand. And then I guess even the bigger hurdle is like make allocations to Bitcoin. So maybe you could walk us through a little bit more of your background prior to joining Unchained.
Sure. Yeah. So coming out of college, I studied finance in college, and I went to work in traditional finance afterwards. Worked at a company called Capital Group, a very large asset manager for a while, and then transitioned to BlackRock. When I was at BlackRock, at the beginning, I was actually working on their wealth advisory team. So working with financial advisors, helping them construct portfolios for their clients, and helping them put BlackRock mutual funds and ETFs into their portfolios. And then after doing that for a couple of years, I did transition to the treasury management team. So instead of working with financial advisors, helping them construct portfolios for their clients, I started working with corporate treasurers and helping them integrate BlackRock money market funds into their corporate treasury strategy. And it was a bit ironic because at this point I was like fully going down the Bitcoin rabbit hole, totally buying into the cash is trash philosophy, while literally being on the cash team for BlackRock and selling a cash product. So not the most fulfilling job in the world. And eventually I reached a breaking point and said I got to work in Bitcoin, and was lucky enough to have an opportunity at Unchained.
Yeah. Yeah, no, that's, I mean, I feel like that happens to a lot of people as far as like they understand Bitcoin, and that understanding, it means, you know, they need to change their behavior with this new information. But I do want to get a little bit deeper into how corporate treasurers think. You know, you mentioned that prior to us, you know, recording this conversation, you were talking a little bit about how those money market funds function, and you know, some corporate treasurers, that I guess the idea being they're very risk averse. So, you know, even if they could get a higher risk adjusted yield, they may not even go for it if it made like mathematical sense from your perspective. So I guess like what are those conversations with those folks like, and really what is their like objective function that they're trying to fill?
Yeah, I certainly don't think that dynamic like helped at all in terms of my enjoyment of the role. But yeah, I mean, if, you know, not to generalize, and I only worked in this space for so long, but from my experience, you know, when you think about the individual that becomes a corporate treasurer, they're typically more of a conservative individual. And that's really what the job requires. I mean, you know, I was speaking with a treasurer not too long ago and kind of talking about, you know, when are you going to implement Bitcoin in your strategy? And the response was, you know, my job is not to make money for the company. It's to not lose money for the company. And so it was frustrating having these conversations because, to your point, like there were scenarios where it was like, look, we have a better product available that can offer you a higher yield with the same amount of risk. And none of it mattered because someone in that position was most concerned with career risk. And as long as they were just doing what every other treasury team was doing, as long as they were doing what Apple and Facebook and Tesla were doing in terms of managing their own strategy, Tesla's maybe a bad example because they had an allocation of Bitcoin for a little bit, but you get the point. I mean, that was what mattered most to them. And so, you know, and this is me at the time talking about like an ESG money market fund, like still a very conservative product in the grand scheme of things. You look at where we're at in Bitcoin adoption, like Bitcoin, although we've come a long way, Bitcoin is still very much a radical idea, especially to these individuals. And so on top of that, you know, you have this dynamic where you're working with a massive institution. It's not just one person that's making that decision, right? You have to have, even if one person or a couple of people on the treasury team are on board with making the smallest of allocations to Bitcoin, they still need to get the rest of the team on board. And I think it will just take time. And, you know, back in 2020, 2021, you saw MicroStrategy and Square and Tesla start making allocations to Bitcoin. And I got caught up in the hype with everyone else, like, oh, this is the beginning, right? This is the beginning of everyone making moves. And then, of course, in hindsight, now we see that they were the radical individuals or institutions making these allocations. If there's hope for the future, and you think about that dynamic with career risk, I really do believe, as Parker Lewis puts it very well, gradually then suddenly. I don't know when it's going to be, but I do think that the game theory is playing out in real time, and at a certain point, we will reach a tipping point, and overnight, we're going to go from these corporate treasury teams saying, I can't afford to put Bitcoin on the balance sheet, to I can't afford to not put Bitcoin on the balance sheet. And I think that's where the fun starts to begin.
Yeah, and I mean, in recent news, we did have a state-run pension fund out of Wisconsin recently make a Bitcoin ETF allocation, which I thought was honestly like a huge development, because I think that's the type of money that really needs to have a Bitcoin allocation, because their mandates require them to hold a certain amount of US Treasuries. And I think that that's like really where the rubber meets the road in terms of the math that's going to take place. And so, like, I guess, do you agree with that assessment of pension funds being, a large, I guess, piece of that game theory? Or do you think that, this Wisconsin pension fund is more of like a maverick, and we're just going to kind of see a slower grind of more corporates, leading the charge?
Yeah. I mean, really, I think it's probably a combination of both. You had the I guess the head of digital assets now, Robbie Mitchnick at BlackRock, saying recently that he expects that sovereign wealth funds are going to be, one of the next big player in pension funds as well, starting to allocate to Bitcoin. And the thing is, you're dealing with such large asset levels that even a 1% or a 2% allocation is going to make a massive difference for the broader industry. But yeah, I mean, I think if you believe in the long-term vision that Bitcoin becomes the global reserve asset, which I certainly do, I think all of this is a part of that process, and it's going to take a really long time, I think, to see that vision develop. It's not going to happen overnight. But yeah, I mean, I think, to kind of go back to your question, like, I think they are trailblazers, and maybe they're going to be standing on the ledge by themselves for a while. And maybe, it'll take a couple more crazy pension funds that are willing to stand out on the ledge by themselves for a little bit. But eventually, same kind of thing. There will be a tipping point, whether it's corporate treasuries or pension funds or sovereign wealth funds. We're seeing it play out in real time. Like, Bitcoin is not going away. It's getting further and further entrenched in the industry. And I think what's really funny is you reach a certain point where you may have people begrudgingly making allocations to Bitcoin, going back to the idea of career risk and doing what everyone else is doing. It's like, it doesn't even matter if you believe in it yourself. That's the game theory of Bitcoin, right? And it's been proven right so far. So.
Yeah, and the kind of the last piece I want to touch on in this corporate treasury management area is, is there much discussion of, I guess, real versus nominal return? Because I think, like, a lot of people, maybe from like a very, I guess, casual perspective, might say, oh, CPI is X, therefore I should be returning greater than X. But I think a lot of people have a more nuanced understanding of inflation. And I mean, recently at Bitcoin for Corporations, Michael Saylor was saying, if you're not returning 12.5% per year, you are losing in terms of purchasing power. And so I guess, is that a conversation that corporate treasurers have? Or is that mostly just kind of relegated to kind of the Bitcoin and perhaps like gold bug space as well?
Yeah, and I guess, to be fair, I'm a little bit removed from that space at this point. It's been 3 years since I was working on the corporate treasury team at BlackRock, and a lot has happened over the last 3 years. So I'd be curious to be a fly on the wall in those discussions today and see if it is the same or if it's changed. It wasn't a part of the discussion, certainly, when I was working there. Both externally working with clients, but internally as well, just like talking to my peers within the corporate treasury team. And, Michael Saylor, I think, is one of the most important people we have in Bitcoin, but I think he has laid it out, at least in my perspective, better than anyone else in terms of, the idea of cost of capital and the melting ice cube problem. And I think it's probably happening more. If I were to guess, it's probably happening more than it ever has before, but I just think it's such a long process. Like, I was at the MicroStrategy conference last week, and was there for, the Bitcoin for Corporations portion. And it was great. It was super high signal, but it's not like you had corporate treasury teams or, the head treasurer sitting in on these sessions and saying like, all right, I'm ready to make an allocation of Bitcoin, at least from everything that I saw. Like, I think they're curious. I think they at the end of the day, the numbers don't lie, even if you don't believe in the numbers that Michael Saylor quotes in terms of asset inflation and the cost of capital, like even the inflation numbers that the government is telling you, which I would imagine are probably,
favorable
very,
for them, maybe.
Yeah, exactly. They're positioning it in a way that makes it look better than it is. It's still, if you're putting your money in a bond fund or a money market fund, like, you're locking in losses. And at a certain point, maybe it doesn't matter to the corporate treasurer that only has a couple of years left and then they're going to retire anyways. But at a certain point, the numbers don't lie. And if inflation stays as high as it does, that melting ice cube problem is going to become real for every treasury team. And so I think it's just going to take a really long time, one, because of the conservative nature of corporate treasury teams and because of how bureaucratic and slow moving these massive institutions are. But Bitcoin is clearly not going away. And I think they're in a due diligence process right now. Like, this is just one man's opinion. If I were to guess, I think we're still probably a cycle away from like real enterprise adoption. But just like everything, all these things take time. And, I don't know who the quote is attributed to, but the whole idea that you overestimate how much can happen in 1 year and underestimate how much can happen in 10, I think that's a perfect quote to kind of attribute to that space as a whole, because I think it's going to be slow moving, and then we're going to have a massive wave all at once.
Yeah, and I guess in terms of this idea of like career risk that you mentioned, I guess I want to get a sense of how you approached that idea when, you were learning about Bitcoin and, at the same time you're working on these money market funds. How did you think about that career risk? And did you get any response from any of your colleagues at your previous roles before you joined Unchained? And I guess along the way, were you like the Bitcoin guy in the office, or were you pretty low profile?
By the time I was like, really a Bitcoin guy myself, I was working on the corporate treasury team, and I worked on a very small team. So like, I was a Bitcoin guy to like still all my friends at BlackRock and like the people still on the sales team in wealth advisory. But like, I didn't really bother anyone in my treasury team about it because it's like kind of like talking to a brick wall in some sense. Yeah, I mean, career risk, it's interesting. Like, I really didn't like my job. At the end of it, I enjoyed my time at BlackRock as a whole, and working on the sales desk was a great job. But by the time I was in corporate treasury, I didn't love it. I knew there wasn't a future for me there. And then, I was absolutely a Bitcoin guy at this point, going down the rabbit hole. And so I think people externally saw my move as a ton of career risk, but I didn't feel really any of that. It's like, yeah, of course, like, this is the future. Like, of course it's going to work out. And, then we had a bear market 12 months later, and it's like, oh, yeah, okay. But yeah, no, it was funny. It's like, I felt like a genius at the time. It's like, Bitcoin is the future. I get to break away from traditional finance. I get an awesome opportunity at Unchained, which was really like my top choice. But like, people were excited for me, but also like very wary. It's like, you're leaving BlackRock for what? It's like my mentor who is a stockbroker of like 30 years. He's retired now, but he was pretty vocal about like me not throwing away this golden opportunity at BlackRock or whatever. And so it took a while. I mean, I think even now, it's just like with the ETF adoption and stuff like that, that's brought a lot of legitimacy to the space. It's kind of like, I'm not running victory laps or anything like that, but I certainly have gotten a couple of text messages that are, congratulating me on Bitcoin success and whatever. But some of them are still very much like backhanded compliments too, or it's like, I can't believe Bitcoin's doing as good as it is. And it's like, yeah, of course it is, like, so.
Yeah. And I guess like you mentioned this idea of like the ETFs kind of being this signal for success and adoption to a lot of people that, aren't at the bottom of the Bitcoin rabbit hole, so to speak. How do you think about that cycle of adoption? I know, again, prior to us recording, you were talking about this idea of how people move down this funnel of engaging with Bitcoin. You might hear about it and you're like, oh, well, I'll get $10 worth on Robinhood and watch the number go up and down and, have some fun or something like that. But it seems like over time, as people begin to engage with it, they change their behavior. So could you talk a little bit more about that, how you see that kind of cycle of people engaging with Bitcoin?
Sure. Yeah. And I mean, I think a lot of it's going to be speculation because we're still so early on in like this ETF adoption. But if I were to speculate, I really do see a lot of parallels with the typical Bitcoin journey for an individual, right? And most people start by buying a couple of $100 worth of Bitcoin on Coinbase probably. And then they have some skin in the game and they start learning more about it and they buy more and they're reading more. And then they, FTX happens or whatever the case may be. They get a scare and they start learning about the importance of private keys, or maybe they get burned, right? Maybe they get burned by having their Bitcoin on one of these exchanges that goes down. Any number of different reasons to learn about the importance of private keys. And then they go to single signature custody. And then over time, you learn about the single points of failure that still exist with single signature custody. And then you end up at multi-signature custody and utilizing a service like Unchained. As much as Unchained, I think, is doing a very good job trying to change that typical pathway and helping people go from never owning Bitcoin to right into multi-sig and cold storage and being self-sovereign. The reality is that's not the typical pathway at this point. My point of all that being, I really see a lot of parallels. That's kind of how I see ETF adoption playing out. Like I personally don't think it's that hot of a take to say that I think the Bitcoin ETFs are a net positive for the industry. It increases awareness. It increases the legitimacy. And let's be honest, the convenience of being able to get access to Bitcoin exposure. But, it is a Bitcoin proxy at the end of the day. And so my speculation is that over time, as you start to learn more, as you start to have skin in the game, you start to learn about the differences between owning an ETF and owning real Bitcoin, and even more so owning real Bitcoin exposure that you get to control the keys to. So that's kind of how I see it playing out. In terms of what the timeline looks like for that, I think that's really hard to guess. If I were to guess, I think it's going to probably take a really long time. But I do believe ultimately real Bitcoin's going to win out because of the value and the power that you get from it that you just don't get when you're owning an ETF, whether it's the liquidity aspect and the 24/7, 365 trading from anywhere globally in the world. You're not in these arbitrary stock market trading hours that are created because humans have to sleep sometimes, whether it's the ability to utilize it as collateral, although you can make the argument that ETFs are going to do the same. Over time, I don't think there's any, certainly not financial advice. I'll probably say it a couple more times by the end of this podcast, but it's certainly the belief of myself and Unchained as a whole that there is no second best when it comes to getting Bitcoin exposure. Real Bitcoin exposure that you control the keys to is going to give you the most value and the most power, whether as an individual or as an institution. And so I think it'll take time, but I think the ETF is just helping with long-term Bitcoin adoption, bringing new people into the space, bringing new pools of assets that were never accessible to Bitcoin before into the space. And it's going to be interesting to see over time how traditional financial institutions approach that. I mean, if some of these, like Fidelity, I believe, has options to get exposure to real Bitcoin. Are they going to lean into that? Are they going to lean into the ETFs? It'll be interesting to see how that plays out.
Yeah, totally agree. And I think I also kind of have my eye on like, what is the narrative? How are they describing Bitcoin? Is it simply going to be another cycle of Bitcoin is digital gold? Is it going to be, I guess, more of a tech-oriented focus where it's, hey, there's this parallel economy that has innovation taking place in it. There's opportunities there, and there, people building, and like, there could be a synthesis between those two ideas. But it does kind of crack me up to hear people like Larry Fink calling Bitcoin, a flight to safety after calling it an index of money laundering. And so, yeah, I think over time, just those narratives. First of all, it'll be funny. I think, like, having been in Bitcoin, it feels like I've heard every narrative over the years. Like, it's kind of hard to find new ideas in Bitcoin, frankly, because people have been digging for so long into trying to understand what this is. But it will be interesting to see how Wall Street engages with that. But on the point of the ETFs, I know like how Unchained approaches Bitcoin is they want to eliminate single points of failure. And in this kind of ETF custodial arrangement, people are taking counterparty risk. But there's also kind of nuances around how these ETFs are managing the Bitcoin that they themselves custody or delegate custody. So could you speak a little bit about how you see that landscape right now? I know Coinbase is kind of at the center of things, but could you unpack that a little bit more for us?
Yeah, can certainly try. Yeah, so I mean, I think part of what you're referencing there is the fact that I think there's 10 Bitcoin ETFs right now, and 8 of them are all utilizing Coinbase to custody the Bitcoin. At Unchained, one of the core principles that we focus on is eliminating single points of failure in your custody model, making sure that a lot of things have to go wrong before you're even at risk of losing your Bitcoin. 8 of the 10 ETFs all utilizing the same custodian, even if it is a stalwart in the industry like Coinbase. I see that as a single point of failure. And I think, part of it was kind of out of necessity. If you look at, there is, from my understanding, a massive first mover advantage when it comes to like new ETF exposure. Like typically whoever, it's whoever gets the ETF approved first. It's really hard to be a new entrant into an ETF landscape when there's already funds that have an AUM there. And so when BlackRock was able to finally get that first Bitcoin ETF approved, or I think it's ETP is probably the correct way to phrase it, exchange traded product. When they got it approved and their application said we're going to use Coinbase as the custodian, everyone else who's fighting to get first mover advantage and be one of the first ones to offer a Bitcoin ETP, solution, they're just going to copy that application because, it's whatever. We'll figure that out later. Coinbase was already approved. So I do expect over time that number, 8 out of 10, all utilizing Coinbase, I would expect that to go down. The other two are Fidelity and Van Eck. Van Eck, I believe, is using Gemini. Fidelity has been really very forward-thinking in the digital asset space as a whole. They have their own custody solution. I think that'll probably be more of the norm long-term, especially for, a massive institution like BlackRock. Now, I wouldn't be surprised if BlackRock is already working on internally their own custody solution so that they're eliminating single points of failure as well, and they don't have to be dependent on Coinbase's success for the success of their own exchange traded product. So I think that's kind of what you're referring to in terms of the custody landscape. And that's kind of how I see it playing out long term, is that over time it would make sense. If they're not thinking about it, they should be thinking about utilizing their own custody solution, utilizing multi-sig most likely. And Unchained can certainly help. So, any BlackRock, any of the major ETP providers out there, if you guys are looking for a custody solution, Unchained can certainly help.
Yeah, and someone or an organization that was like conspicuously absent from the ETFs was Vanguard. And just the other day, it was pretty interesting. They announced a new CEO, and his name is Salim Ramji, and he was leading the ETF strategy for BlackRock. And they've since come out and said, hey, we're not going to release our own spot Bitcoin ETF. In my opinion, is, hey, they're not even close to being a first mover at this point. So I guess it would kind of be a tough battle to fight there in terms of, getting the liquidity to compete with the others. But do you foresee, I guess, I don't know if you have any connection to Vanguard or understanding of how they function as an org, but do you think that with this move of their new CEO, do you think that they're going to allow their clients at least to purchase other ETFs or not?
Yeah. It was funny seeing that announcement because I actually had the pleasure of working with Salim during my time at BlackRock before I moved to Treasury Management. He was running, it's not like we were on the sales desk together. He was running the entire wealth advisory branch, and I was one small part of that cog. But he was obviously an incredibly sharp and forward-thinking individual. It's great to see him moving over there. I think that's a huge win for Vanguard from every experience I had with Salim. Certainly never root for someone losing their job, but it is kind of fun seeing the game theory play out in real time. I mean, the fact of the matter, Vanguard isn't allowing their clients to get any exposure, even if they're not offering this exchange traded product themselves. They're not even allowing their clients who utilize the Vanguard platform to get that exposure. Salim, from my understanding, was a big part of BlackRock's, move into the Bitcoin space and getting this application approved. I mean, I think the writing is on the wall there. It's purely speculation, but it would be hard to imagine at this point that they bring someone like Salim in only to keep the status quo and not change anything. I think, in my opinion, it's kind of a foregone conclusion at the very least at some point here. Maybe it's going to take some time, but at some point, I think they will allow their clients to get exposure to these products, because if not, it's the game theory playing out in real time. It's like, okay, well, if you're not going to let me the customer is always right. If you're not going to let me get exposure to Bitcoin in this ETP, well, I'm just going to go over to any number of different traditional, exactly, and get exposure there. So I think at the very least, absolutely, at some point they're going to allow their clients to, because they're going to lose money if not. And, that's kind of at the end of the day, the most important thing to all these different institutions. I think building on that, though, I would not be surprised if they kind of turn a 180 and say, and come out with their own. I mean, iShares and Vanguard are the two biggest ETF providers, the two biggest passive asset managers in the entire space. Even though Vanguard doesn't have that first mover advantage at this point, they are so massive that I don't think they would have any problem having a successful Bitcoin ETP if they wanted to. So yeah, I mean, I think that's probably going to happen. I don't know how long it's going to take, but I think Salim moving over there and them getting rid of kind of the old guard, I think is a signal of that exact thing. Yeah.
I think it'll be interesting. I guess having a new CEO is a convenient excuse to be like, hey, we're changing our investment philosophy. But I know
that's the old Vanguard. This is the new Vanguard. Yeah.
Yeah. And I mean, it was kind of, funny to me when they were like, hey, this Bitcoin doesn't meet our investment philosophy. And, I don't remember the specific reasons, but they were basically like, a little bit hand wavy, a little bit like, oh, it's scary and new. That's at least my take on it. But I guess, their model was perhaps broken of how they thought about Bitcoin. And I'm very curious to see what people think of that if they do make that pivot. I think that'll be like a pretty spicy conversation for a lot of folks, because they're like, oh yeah, Vanguard, like if you're anti-Bitcoin, you're like, oh yeah, Vanguard, they got my back, and then they turn around and they've changed their mind and they're like, oh, maybe I need to reassess how I think about this asset.
Absolutely. And I think both as an investors and as employees, it's like, I'm sure there's some employees of Vanguard that like were very against their positioning on Bitcoin, but I'm sure there's others that are absolutely for it. And so, going back to the idea of like begrudgingly making allocations, like it's like I can see people on these teams at the moment. I think the norm is there's one or two crazy Bitcoiners in these conversations, and they're getting outvoted by the majority that aren't in. But at a certain point, I think that'll change, and you'll have the majority, the people who are anti-Bitcoin are going to be outvoted by the majority that believe it's the right path forward. And I think to your point, no one gets into Bitcoin, I think, without challenging some preconceived notions about how the world works, how finance works, how money works. One of my favorite pieces of all time is Why the Yuppie Elite Dismiss Bitcoin by Croesus.
Yeah, shout out Jesse Myers. Yep.
Yeah, I think he just lays it out incredibly well in terms of when you've built your entire career and been very successful in the old world, not only do you have no reason to change, but you're also blinded and a bit ignorant in terms of like, well, if Bitcoin was worth learning about, I would have heard about it from my network of people, who are all super successful and wealthy. And, but then you have you have these changes happening. You have the BlackRocks and the Fidelities of the world. You have new energy and new blood, like Salim, moving to Vanguard to challenge some of those preconceived notions. And so, it's just super exciting to see these two worlds collide, especially having, the opportunity to work in both of them.
Yeah, absolutely. And I guess to me, it's always kind of confused me, or I guess at the very least been interesting just how polarizing Bitcoin can be. It's either, I find that there are very few people that are like, whatever. Like most people are like either for or against it. And I don't know if that's just indicative of my perspective as an American, just given the kind of culture that we live in today. But I've always found that odd. I don't know too many other things like that behave in that same way in terms of the discourse.
Yeah. No, it's an interesting observation. And I think, the other way, there's so many different reasons why it's polarizing. Like the reasons why someone is for Bitcoin or against Bitcoin, you could have people staunchly in those camps, but for completely different, you could have two people that are staunchly against Bitcoin or for Bitcoin, but for completely different reasons. And it's fun being in this space, and I'm sure you can testify to that as well.
Yeah.
It's just interesting being on the front lines of all this and seeing a lot of this market psychology play out in real time, both good and bad.
Yeah, absolutely. Yeah, never a dull day in the Bitcoin space. But to move on a little bit, you just mentioned kind of the market psychology. And I know behind you have a HODL waves chart basically showing, what percentage of the Bitcoin supply has moved at a certain date. And so maybe you could just speak to that. I know that's a chart that Unchained are big fans of, but where are we at right now in terms of like who owns the Bitcoin, what are they doing with it, and what does that mean for this market?
Yeah, certainly. So, I would be doing a disservice if I didn't credit Drew Bonsall and the Unchained team for creating HODL waves, and that's this rainbow chart behind me. The HODL waves basically is a representation of the beauty of Bitcoin is that it's all very transparent and verifiable, and you can look and see how long Bitcoin has been sitting on addresses. And ultimately, the HODL waves chart is a representation that shows over time more and more Bitcoin is sitting on addresses for longer periods of time. It's not moving. And so, it fluctuates just there's ups and downs. It's not like this straight line that just shows people buy Bitcoin and they hold it for the long term. And we're at a pretty high point right now. When you look at the amount of Bitcoin that hasn't moved in over a year, for example, the way that relationship works, I think through cycles is like eventually here, Bitcoin's price is going to increase to the point where Bitcoin will start moving. You'll see Bitcoin moving from some of these addresses where it hasn't moved for a while back to the exchanges to liquidate. You'll have some older Bitcoin holders taking some profits, and the newer entrants in the space becoming kind of exit liquidity for the older holders, and they're just starting their Bitcoin journey. And so it goes up and down, and Bitcoin's price rising or falling has a big impact on how long Bitcoin sits on these addresses. But we do see a trend, even in the few amount of cycles that we've had up to this point. We see a trend that even though it's fluctuating up and down over time, over the long term, you have more people holding Bitcoin for longer periods of time. And I think, to put that in maybe more simpler terms, it's like with this next cycle that I think we're currently in, I certainly don't think we're done yet, just my personal opinion. Let's say for every 10 new people that buy Bitcoin for the very first time this cycle, the reality is a lot of them will probably not be holding Bitcoin by the end of the cycle. The next 20% correction or 30% correction, they exit their entire position and they sit on the sidelines, and maybe they don't get back in for another cycle, and we're past a new all-time high, and they're kind of begrudgingly jumping back in and saying, I should have just held on to my Bitcoin. For every 10, I would say a majority are probably going to have that experience, because that's kind of the typical experience when you enter the space for the first time. But I also am very confident that of those 10, there's going to be at least for every 10 people, there's going to be one or two that become Bitcoin believers and join the I'm never selling camp, it's going up forever, Laura camp. And that dynamic over time, over a very long period of time, is how you get the HODL waves and this representation that more and more people see the long-term vision of Bitcoin. And this isn't just a trade. It's a way to view the world, and it's a very long-term view on the future of finance.
Yeah, and in terms of that's kind of the 30,000 foot picture of seeing these HODL waves and just the larger kind of aggregated trends. But I know in your day to day, you're working with enterprise and privately owned businesses, trying to help them understand the best way to get Bitcoin on their balance sheet. So could you give us a temperature check on what is kind of the deal flow like there, and kind of who are the folks that are coming to Unchained and asking for help securing Bitcoin or help acquiring Bitcoin in the first place?
Yeah, so happy to dive into that a bit. Unchained, I would say, caters to typically high net worth individuals, businesses, certainly some enterprises and institutions. Going back to part of our conversation from a little earlier, I do think it's still early. We do have some enterprises that are utilizing our platform, and more every day are asking for time to speak with us and learn about our solution as they make an allocation to Bitcoin for the very first time. The selling cycle and the decision-making process, rather, is so much longer, though, for these types of entities. The beauty of what Michael Saylor did with MicroStrategy was that he had, a majority voting rights of the company. So he had the luxury of walking into the room and being like, we're making this allocation to Bitcoin. If you don't like it, that's fine. There's the door, but this is what we're doing. The reality is most companies do not have that structure in place, and they don't have someone as forward thinking as Michael leading the charge to be able to make those types of calls. And so, it's a slow process. I think, talking what we were talking about earlier with enterprise adoption, I think especially with the ETF news, whether you're a financial advisor or managing the treasury for a company, you don't have the luxury anymore of just being dismissive of Bitcoin. I think you have to have an opinion on it. And in order to have an opinion on it, you need to get educated on it. And so I think that's where we're at right now for a lot of it depends on how you're defining an institution or an enterprise. But if you're thinking, if I'm thinking about like the companies in the S&P 500, for example, I think they're just starting that process now, or maybe have over the last 12 months as the buzz of ETFs have become more and more real. And I think it's just going to take time because at the end of the day, we've worked with larger institutions where it seems like everyone's on board and they're ready to move forward and make this new Bitcoin allocation. And all it takes is one or two people at the top to step in at the final hour and be like, no, we're not doing this. We need more time. We need to do more research. There's just a lot of red tape when the benefit of family offices and high net worth individuals and smaller businesses or smaller teams is that it's typically a smaller group of individuals that are making that decision. If everyone's on board, it's like, boom, we're off to the races. But when you start dealing with massive institutions and enterprises, there's just so many more people that have to be a part of that conversation and have a say on whether or not to move forward with that type of strategy. To go back to what we were talking about though, and the numbers don't lie, at a certain point, that resistance to change and to thinking through things differently or adopting new strategies is going to crash into the reality of the situation and the fact that Bitcoin is the life raft, and you need to get on board because the ship is sinking. And so I think it just takes time. It's certainly really encouraging having those conversations and having more and more of them every day. But I think it's also a very long decision-making process. So, it's not the most bullish answer there, I guess, but that's the reality from my experiences.
Yeah, and I guess from my experience too, it took me maybe 100 hours to feel like I understood Bitcoin, and then it took me another 100 to actually feel like I understood Bitcoin.
Absolutely.
And so you can't just go around bonking people on the head with Bitcoin Standard. It doesn't really work that way. And there's just so many dynamics when you get to a larger org. And I think when it comes to corporations or businesses adopting Bitcoin or putting it on their balance sheet, the unique thing that I think Unchained does is it has this multi-sig capability, because multi-sig, you could go up, I think all the way up to 6 of 6 if you want that type of quorum, or traditionally what you guys offer is a 2 of 3 multi-sig setup. But I guess, can you just offer any perspective on how you see organizations and corporations interacting with Bitcoin, and maybe just for someone who's hearing this interview and they're like, oh, maybe I should think about this, but how does governance work? How do we decide who gets to spend the Bitcoin? How to just kind of give us a little bit of a high level overview of that and
Absolutely.
How Unchained approaches that.
Yeah, certainly. It's interesting too, the 100 hours and, the decision-making process. I think another really important component is you're not dealing with your own money, right? As an individual or even a small business owner, you kind of have the luxury or the privilege of being well, if it doesn't work out, I'll figure it out. But when you're this massive enterprise or institution and you're dealing with the company's money, you have people's jobs on the line in a lot of regard. Now, look how it worked out for MicroStrategy. It's hard to argue that it's not the right move, but I think that that's an emotional component to it as well. Sorry, to go back to your question regarding, how we're implementing custody at Unchained. So multi-signature custody, as we discussed, it's native to Bitcoin. It's this ability to create, an address that has multiple keys associated with it. You can create that address to say, there's this number of total keys, but in order to access the Bitcoin, I only need this many keys out of this many total keys. What we do at Unchained is we really specialize in 2 of 3 multi-signature custody. So there's 3 private keys in total associated with a given address, and you need any 2 of those 3 keys to move the Bitcoin. We have a couple of different flavors of that custody model. In every custody model, Unchained is always going to hold 1 key. We never want to be in a situation where we have unilateral control to move the Bitcoin. We don't want to have the ability to rehypothecate the Bitcoin. Not like we are going to be tempted by by the power that gives, but we want that's a massive factor in terms of building trust with our clients, that it's like, even if we did want to, we can't move the Bitcoin. Now, in terms of who holds the other two keys, that's on the client to decide how much control they want to take on themselves. A lot of our clients are going through the client-controlled method, where they're holding the other two keys. They hold two keys, we hold one. We don't have access to the Bitcoin directly. They have access to the Bitcoin because they have two keys. They don't need our key at all. But if anything were to ever happen to one of their two keys, we can always use our key as a recovery method. Or maybe it's just inaccessible. Maybe they're traveling. One of their business partners is out of pocket and they want the one business partner to sign and ask Unchained to sign. That's how the client-controlled model works. We also have a delegated custody model, where there are certain clients or individuals or institutions that don't want the full responsibility of holding two keys themselves. Maybe they only want to hold one key. Well, we have an option where, in our partner model, you can outsource. We have a network of key agents that we work with that have been vetted through our compliance team, very rigorous vetting process, that you can enlist to hold a key on your behalf. As a client, you still get the final say on what keys are used and when, but it reduces some of maybe the operational security burden that comes with securing two hardware wallets and two seed phrases yourself. Or maybe it's from more of a liability or legal standpoint that they're not allowed to hold the keys themselves because, it's an irrevocable trust or whatever it may be. And then we have a fully delegated model where you can delegate both keys. Unchained holds one key, and then the other two keys are held by two different key agents. So in that arrangement, 3 different key agents, Unchained being one of them, each hold one key. You need any combination of 2 of those keys to move the Bitcoin, and the end client, the end institution, is the one calling the shots in terms of who uses what keys and when. I would say that multi-institution, that delegated custody model, is going to become the standard for enterprises and institutions. When you start dealing with a large enough corporation or company, whether it's for efficiency purposes or for liability purposes, maybe you don't want to hold any keys yourself, but you've gone deep enough down the rabbit hole to understand the counterparty risk that exists with leaving your Bitcoin with a single entity, whether it's Coinbase or Gemini or Anchorage or whatever it may be. They may have their own multi-signature custody setup, but it's still being run by one entity, one single party, that if they fail, your Bitcoin is gone. In this delegated model, right, you're creating redundancy and fault tolerancy so that even if Unchained disappears off the face of the earth, you still have the ability to access the Bitcoin using key agent number 2 and key agent number 3 in that doomsday scenario. Unchained isn't going anywhere. And so I think that's going to become the standard for institutions and enterprises. And then a really important component to all of that as well is through our platform, we have the ability to layer permissions on top of that. So, you may be thinking to yourself like, okay, well, what if I'm a board of 5 people or 10 people that all want to be a part of that custody model? How is that going to work if there's still only, 3 keys or 2 of 3 or whatever it may be? Through our platform, we have the ability to layer permissions on top of it. So whether you're holding a key yourself, or maybe you just have the ability to approve transactions. So key number 1 and key number 2 are used to sign, but a completely different individual has the final say on whether that transaction is broadcast to the Bitcoin network. Someone else maybe only has view-only access, where they aren't a part of the key custody model process, but they have the ability to log in and download account statements for accounting purposes or whatever it may be. That's really where we see the future of Bitcoin custody going, especially when you start dealing with institutions and enterprises, is this network of keys where you could even theoretically branch out to make it more sophisticated than a 2 of 3. What we've found up to this point is that 2 of 3 base layer with the additional permissions on top of it, you can have a really sophisticated, really robust custody model. But Bitcoin isn't rigid, and there's flexibility there as well.
Wow, fascinating. Yeah, I didn't really, understand the extent to which that you had that kind of flexibility around the 2 of 3. Wow, that was very interesting. Thanks for sharing. And I think the last thing I would love to hear a little bit more about is like how you're using multi-sig in the context of IRAs Unchained. I'm not sure if that's something that you guys or you yourself touch very often, but I think that's a very unique product as well, is like not having to delegate custody to somebody to be able to have actual Bitcoin exposure in your IRA. Like, in the sense that you're delegating custody fully, like you might as well just hold the ETF, but being able to actually have key ownership in that context, I think it is very unique. So did you work with that yourself, or can you speak to that at all?
Yeah, no, the IRA product is very near and dear to my heart. I've been working on it since we kind of first released it, partly because it was like, you're the traditional finance guy. It's like from a sales perspective, it's like, yeah, you handle the IRAs. So yeah, I've been working on it from the very beginning. It's a really cool product. It's been around for a couple of years now. It's incredibly popular. I think it's becoming probably, I don't have the numbers off the top of my head, but I imagine it's one of our most popular services that we offer. What it is you have the ability to set up a traditional SEP or Roth IRA with our IRA custodial partner. And we build one of these 2 of 3 addresses titled to your IRA. Typically then people are funding it with existing retirement assets. So they have an IRA at Fidelity or Schwab or Vanguard or wherever it may be that's sitting in boring old ETFs or mutual funds, and they want not just Bitcoin exposure, but real Bitcoin exposure. And we have the ability to take those retirement dollars, turn them into Bitcoin through Unchained's trading desk, and deposit it into one of these 2 of 3 addresses. If you have an old 401k, same thing. Or we certainly have clients that just set up an IRA with us and start making annual contributions and taking those dollars and on an annual basis turning them to real Bitcoin custodied in this model. It is the only solution in the space that allows you to have real Bitcoin in a standard IRA while still controlling the keys. And one of the questions I get all the time is like, how is that possible? Like, what is to stop me from using my 2 keys and sending that Bitcoin elsewhere? And the short answer is nothing. Like, Bitcoin doesn't care about IRAs or trusts or anything. It's Bitcoin on an address. You either have the keys or you don't. Obviously, that's not the IRS's perspective on the matter. There's nothing stopping you, even in this model, to take your 2 keys and sending that Bitcoin elsewhere. We can't prevent you from doing that. But because we have that 3rd key, we have visibility into your IRA vault at all times. And because we're working directly with the IRA custodian, if you were to do that, we can't stop you from doing that, but if you were to do that, we would see that. We would report it to the IRA custodian, and that's going to show up on your 1099 form the following year as a distribution. Really no different than like if you have a Fidelity IRA right now. Like, there's nothing stopping you from going to Fidelity and saying, send all of these funds to my personal bank account. They might give you a warning, just like we will. But at the end of the day, you have the ability to do that. They're going to give you your check. They're going to give you your 1099 form and say, work it out with your tax advisor. So it's multi-sig in this collaborative custody model, which allows us to be, again, the only solution in the space that allows you to have real Bitcoin in an IRA while controlling the keys. And I guess one last component to that that's really important. I mean, there's a lot of different reasons. I think, again, not financial advice, educational purposes only. There's a lot of reasons why we believe that it's better to have real Bitcoin exposure than not. And a really important component to that is just at the time of distribution, if you're in one of these exchange traded products, at least as they're structured today, there's no way to take an in-kind distribution. If you have, $10,000 worth of Bitcoin ETFs in your Fidelity IRA, if you want to take a distribution when you retire, you're going to have to convert those back to dollars and take a dollar distribution. What's really cool about the Unchained IRA is you actually have the ability to take a Bitcoin in-kind distribution. So at retirement age, when you turn 59 and a half, or if you want to take an early distribution, that's always an option as well. You have the ability to take that distribution in kind and actually send that. We have a lot of clients that have a personal vault with us for their personal Bitcoin titled to Connor Dolan or Spencer Nichols, the individual, and they have an IRA with us. I guess an important component I didn't point out earlier You can manage as many of these multi-sig addresses. You can have a personal account, a business account, a trust account, 2 IRA accounts with us. You can manage all of that with the same 2 hardware wallets, the same 2 seed phrases, the same custody model. So anyways, we have a lot of clients that have like a personal account or a trust account with us as well. And at distribution age, they're taking their they don't want to convert back to dollars. They're in Bitcoin for the long term. They take their distribution in Bitcoin and just send it to one of these, other vaults to store for the long term.
Yeah, and I guess thank you for that explanation. That's like, I guess the same thought crossed my mind. It's like, couldn't someone just take the Bitcoin out of the IRA if they held both keys? But I mean, I think like that it's kind of the same idea with a traditional like equity-based IRA. But I guess like, you mentioned this idea of like thinking for the long term, using Bitcoin as a lens to think about economics through, and really like kind of expanding one's time horizon. I guess, in the Bitcoin space, lowering one's time preference is another way of saying that. I guess when you are talking to businesses, are you like looking that far out with them in terms of explaining, like, I guess that's a multi-part question. Are you looking that far out, or are you even trying to explain the value proposition, or are they already there? Really what I'm trying to get at is like, why are you working in this space? Like, what is your vision for where Bitcoin can go in the long term?
Yeah, man, big question there. To the first part, I would definitely say, we do our fair share of orange pilling at Unchained, but the reality is most of the people that we're working with are already, at the very least, Bitcoin curious, if not down the rabbit hole themselves, and just looking for a better long-term custody model. As I'm sure you've experienced in your own personal life, as every kind of Bitcoiner has, it's like trying to convince people or force people to learn about Bitcoin. It never works, right? It's like you really have to, you have to get into that. You have to go down that journey when you're ready. The worst thing, people can do outside of not owning Bitcoin at all is like just buying Bitcoin simply because someone else told you to, because inevitably when that crash comes and you don't have the conviction or understanding of what you're actually holding, you end up selling and liquidating your position, and then Bitcoin recovers and you're still on the sidelines, and then maybe you finally spend the 100 hours or whatever to actually learn it. So to answer the first part of your question, I mean, I think most of the institutions and businesses that we're speaking with at this point, like they already recognize the problem. They see the problem happening in real time. And when I'm saying the problem, I'm referring to the risk that exists with holding dollars on your balance sheet. Bitcoiners will hear that and be like, yeah, of course. And then someone who's not a Bitcoiner will hear that statement and be like, what are you talking about? Dollars are the safest asset you could possibly hold. So rambling a bit, but I would say the point of that being like a lot of the high net worth individuals, businesses, institutions, a lot of them are already there. Even if they don't own Bitcoin, they know they need to. We definitely do our fair share of orange pilling, as I said, but it's not the best use of our time because, you can lead a horse to water, right? And I think that's very true within the Bitcoin space. It's like, again, I'm sure you've experienced it many times. It's like for every 10 friends or 20 friends that I told about Bitcoin, like 1 or 2 of them actually listened to me. And that'll get better over time, but maybe I'm just not good at orange pilling. I don't know. Yeah, I mean, I think talking about the long-term vision, like why do I work in Bitcoin is a huge question. Bitcoin has given me more purpose than I think I've ever had anywhere else in my life. When I was working in corporate treasury management and like I'm helping Facebook invest their $2 billion in a money market fund so that they can have an extra, whatever, $500,000 or whatever it is at the end of the day. It's like, what am I doing with my life? How can I be doing this for the long term? And you look at Bitcoin as, this promise is certainly an investment opportunity, but much more than that, a promise for a better world, a better financial system. I mean, I think that's why I joined it. It's been, one of the best decisions I've ever made in my life. I'm so much more fulfilled and happy, and I imagine you feel the same way working at Bitcoin Magazine, just working in the space and working at a company where everyone is focused on the same North Star, it makes such a difference in the culture, in the purpose that people feel, in the way that people treat each other. I mean, this gets a little, sappy, but I really do believe that Bitcoin has that impact. And to go back to answer your question, like, where does this happen long term? I mean, I think Bitcoin will, I don't know when, but I'm very confident that it will one day be the global reserve asset that everyone utilizes in the same way that we're utilizing dollars now and saying dollars are the safest investment that you can possibly hold. Eventually, that answer is going to be Bitcoin is the safest investment you can possibly hold when you're thinking about preserving your value and your wealth for the long term. And so corporations, sovereign wealth funds, pension funds, it's already starting, and it's going to take a long time, but it really feels inevitable in some regard that they're all going to get on board eventually, because Bitcoin is the greatest money that we've ever had. It is Bitcoin, it's money savings technology, and it's the future.
Yeah, I mean, well said. And I obviously, working at Bitcoin Magazine, do have a bias, but I tend to agree with that perspective. And I think at the end of the day is like trust minimization in terms of how Bitcoin operates with kind of this adversarial network. Trust minimization is risk minimization. And in the kind of the fiat currency complex, you kind of have, trust inherent in that system. Therefore, from my perspective, like, you have this risk. And I think people are beginning to wake up to what like systemic risk, and I guess like, in terms of like banking, the counterparty risk is like inherent. It's kind of like, people exist in that every day. But I do agree. I think like when people begin to engage with Bitcoin, it really, first of all, it's motivating. You're like, okay, I don't have enough Bitcoin. What do I do to get that? And the question really becomes like, how do I create value? And I think like feeling like you have an impact on that really can bring the best out of a lot of people. And I see that, every day at Bitcoin Magazine, working with just like, super inspirational folks that are like at the cutting edge of a lot of what's happening in the space too. And I feel similarly, like having interacted often with people from Unchained, is like, this is building something valuable and something that like matters. And I think that like kind of building something kind of ephemeral and maybe the TradFi space, like, it can be lucrative, but perhaps doesn't feel as tangible in the same way. So
absolutely. Well said.
Get a little sappy myself.
No, I completely agree. I mean, I think, the people, listening to this that believe in the cause, it's kind of par for the course at this point, but it's a really fun space to work in, that's for sure.
Yeah. Well, Connor, I know we've covered a lot of ground here. Really appreciate you being so generous with your time. If there's anything else you feel like we got to touch on today, feel free to drop that in. But as well, like, if anything that you've said resonated with folks listening, where can they connect with you and learn more?
Yeah, no, we covered a lot. I appreciate the time and the opportunity. It's really nice speaking with you. I mean, I think I would just reiterate my point. Like, the best thing you can do if you're not in Bitcoin, like, don't buy Bitcoin because I told you to, or because Spencer told you to, or because Michael Saylor told you to. I mean, that's a better reason to buy Bitcoin. He's a really smart guy, but the best thing you can do is spend those 100 hours and just start learning and, reading, Ross Stevens and Michael Saylor and Parker Lewis and Jeff Booth and Preston Pish. I mean, there's so many good sources out there. I don't need to name them all. That's how you kind of build long-term conviction. And going back to your point about finding purpose. I mean, for me, Bitcoin, there's only two perfectly finite resources in this world, time and Bitcoin. And I think learning about Bitcoin helps you have a better relationship with time and how you want to spend your time. But no, I really appreciate the opportunity. If you want to learn more about Unchained, you can go to unchained.com, right? On the website there, you'll see the option to book a consultation, and you can you set up time to speak with a member of our team to learn more about what we do. If you're interested in, I'm on Twitter. I'm not like the biggest poster in the world, but you can certainly find me on Twitter. Unchained has a great Twitter handle that, is a great way to keep up to date with what we're working on. But Yeah, outside of that, I'm just really happy to be on here. I appreciate the time, and it's always great connecting with you.
Yeah, awesome. Yeah, Connor, thank you so much. This was a lot of fun, and I look forward to doing this again soon, I hope.
Yeah, absolutely.
Fantastic. Peace.
Thank you, Spencer.